You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again, another week. Time to talk a little bit of futures options. Yes, it is time for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are mainlining these days. Welcome to all of you, new and old, joining us here on the network. A record year last year. We thank you all for contributing to that. This January, our 16th anniversary. We're legal. We can drive now. So a lot to celebrate there. We'll have to put together a fun party sometime soon to celebrate that milestone suitably out there. Not many podcasts make it that long, let alone networks, let alone create an entire options podcasting medium along the way there. But c'est la vie. We've risen along with the podcasting tide, and it's been fun to see. We launched this thing. It wasn't even an iPhone. You had to have an RSS reader to get podcasts. They were extremely niche, shall we say. And lo and behold, all these years later, how things have changed. The network has grown. We appreciate all of you who've joined and had fun along the way. Of course, if you want even more in your lives, theoptionsinsider.com/pro is the place to go to learn more. Or, of course, for all you cool cats out there, /secret club. As we get right into it, listeners, it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side as well as to the dark side out there. You know, I love all our guests that join us here in the CME hot seat. They bring a lot of welcome insights to the world of futures options, but don't tell them. But I also like the shows when there's nobody here. It's just me, because then I get to dictate where we go. The complete control is mine, listeners. The Rock Lobster calls me a benevolent dictator here on the network, and I get to exercise that control on days like today because there's no one here to tell me which way to go. Looking at the chart right now, by the way, you guys can see this for yourselves. If you follow us at Options, we usually tweet it out before showtime. The folks at CME always tweet it out before showtime as well. You can see that it's a pretty evenly split week right down the middle. We haven't seen one of these in a while. Pretty much 50-50 light to green. Also, the size of the most extreme moves to the light side and to the dark side are also pretty close as well. Usually, even if we have a close week in terms of numbers, the top mover to the light side or to the dark side may blow the doors off the top mover in the other direction. This week, it's all pretty close, pretty even Steven out there. Haven't seen one of these weeks really in a while. So it means I get to choose. And you know what? To the light side we go. Let's keep it green. Let's keep it happy. Let's keep it optimistic to kick off the new year out there. Number 5 out here to the upside this week is corn. 1 3/4% to the upside. Again, kind of evenly split, so not costing you a lot to break into the top 5. In fact, if we expand it to a top 6, that gets us to our old friend WTI just outside the top 5 this week at 1.47% to the upside. But number 5 is actually corn, so we start off in the ags officially this week. Then we stay in the ags, so number 4 with oats, up 2.21%. If you've been listening to this show for any length of time, you know oats, not really an option stalwart out there, listener. So probably not going to hang our hat in oats this week. Don't want to burst any bubbles, but that's just probably how it's going to play out. Number 3, one of our frequent offenders, our first one here on our list this week. It is lumber, up comparatively, at least for this name, not much at all, 2.31%. It was number 1 in the same direction last week, up 14.76%. That's the kind of week we've come to expect from lumber, not 2.3%. They can do that in its sleep. You know the deal as well. Lumber not really blowing the doors off from an options perspective. We just talked about this actually yesterday on our pro Q&A with Scott Nations. We had a question about lumber and why doesn't it trade more, and will these new mini contracts perhaps fix that? So intriguing stuff if you want to hear Scott. Obviously, Scott spends a lot of time when he's not trading and looking at and creating new vol products and writing books in the futures market. So he has some interesting thoughts on that. You can check that out over there on the pro if you are so inclined. Number 2, back to energy, listeners. It is RBOB, up 3.67%. It was number 4 in the same direction last week, up 9.17%. That shows you how upside biased we were last week, listeners. It was number 4, and it was up over 9%. So again, a little bit quieter week this week in both directions. And then number 1 with a pretty decent-sized bullet, another one of our frequent offenders, it is Bitcoin, up 9.45%. It was number 5 in the same direction last week, up 8.3%. So a banger couple of weeks here for Bitcoin. Didn't get a chance to do a crypto rundown this week on the network because we were all off for the MLK holiday. So maybe we'll spend some time out there looking at the CME crypto and what's afoot out there, listeners. To the dark side we go now. Number 5, going out to the equities, the E-mini Dow. We don't talk Dow very often here on the show, but E-mini Dow off 3.37% this week. On number 4, we have Class 3 Milk, our old friend Dairy, off 3.62%. Number 3, we got metals, palladium off 5.02%. Hot on its heels, also hanging out in the metals at number 2, it's platinum off 5.04%. And number 1, so we have all 3 of our frequent offenders this week, listeners. Number 1 to the dark side this week, nat gas off 7.45%. So you can see the extremity of the moves to the light side, 9.45% for Bitcoin, 7.45% for nat gas. Pretty close. Maybe a little bit of the bottom 5 was a little bit more robust than the top 5 there, because number 2 is only 3.67% for RBOB versus 5.04% to the dark side for platinum. But otherwise, it's a fairly even Steven week. We haven't seen many of these out here on the futures options realm for a while, listeners. All right. That means I get to choose where we start, listeners. I think we're going to go to number 1 to the light side this week. We're going to go to Bitcoin first.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, let's do it, listeners. Let's head on out to crypto. You guys know where you can find these reports for yourselves in your hot little hands, updated all the time, 24/7, for your interest and or trading convenience, education, and or information out here. You go to the CMEgroup.com/TWIFO. Then you're going to go to that product drop down, and you're going to slide down one slot from ags all the way to cryptocurrency. From there, you're going to go into the product family. You're going to go indexes, and you're going to go Bitcoin. We're going to go to the big BTC first. see what's lighting things up out there. What is certainly lighting it up, what's catching my eye first is just this price level. North of 20,000 again in Bitcoin land, listeners. 21,180 as we kick off the show here. That's up a whopping 1,630 handles just since Monday, up 8.3% just since Monday. You go back to the end of our show last week, it's up nearly 10%, about 9.5%. So wild couple of weeks out here for Bitcoin. Of course, you extended a couple of weeks, you're up nearly 20% out there. So Bitcoin rocking and rolling out there. What's driving all this love for all things crypto? Let's investigate and see how that's playing out here. See what's lighting things up from an overall Bitcoin options perspective. And the first thing I'm happy to say is we're actually seeing some paper out here in these big 5X Bitcoin options again. Over 3,000 contracts, 3,029. Now, that's nothing in the grand scope of the other products we're going to talk about here. But for this product, for Bitcoin options, that's very closely watched, and a lot of people have been waiting for this thing to really catch fire. 3,000 contracts, and this is the contract that would do 30 in a whole week when it first launched. So 3,029, that is nothing to sneeze at, listeners. And we got some decent-sized trades. Looks like it is the Feb 25,000 calls that is leading the dance this week with 270 contracts, including looks like maybe a vertical going up yesterday and today, 50 times each, 25,000, 30,000 vertical, and the 25,000 is going up just straight up 170 times on Tuesday as well. Remember, we were closed on Mondays. That's another thing. This is a shortened holiday week, listeners, and still already 3,000 contracts. So big Bitcoin options making up for lost time. And right behind it, we have the 10,000 puts. You know, that's been an interesting line in the sand for some time. I don't care what product it is. The 10 level has drawn attraction, whether it's the 10,000 puts in the big Bitcoin options, whether BITO, a lot of people were hanging out on the 10 strike selling puts there. I know it's not quite 1-to-1, but it's a number that people seem to gravitate towards in Bitcoin. And the 10,000 puts doing 250 contracts this week. All of that today. Now, there are about 700 contracts open, so it could be closing. Someone may be deciding to get the heck out of Dodge out there on those puts. But either way, pretty active. We also have a 16,000, 18,500 put spread going up 150 times, actually 160 times on Tuesday, all opening there. So a lot of interesting new opening paper going up out here in the Bitcoin options. And quite frankly, I'm happy to see that. You know, these products have been somewhat languishing and looking forward to getting a little bit of action. Let's go really quickly see what's cooking in ETH as well. ETH right now, 1551. It's up 8.5% or 121 handles this week as well. The big ETH contracts not catching fire the way the big Bitcoin ones are. Only 177 contracts on the tape this week. So not a ton to sink our teeth into out there. Instead, let's go smaller. Let's go micro, because a lot of people are also waiting for these micros to really catch fire. And you know what? Comparatively, not a terrible week for the micros either. You know, it's always weird when the micros are doing a fraction of the volume of the big 5X contract, but that's kind of the scenario we find ourselves in. At least they're closing in on 500 contracts for the micros. You know, sometimes we'll pull it up and there'll be 24 contracts. So nothing going on out there at all. But this week, some paper, nearly 500 contracts. Looks like the 14,500 puts in January are going up 140 times. That is the big dog. Followed by the 25,000 calls. That's also active out here in April. So intriguing stuff out here. Those went up straight up. Someone just bought 100 of those on Tuesday. Looks like that's one of the bigger prints out here. So yeah, the micros doing a little bit of paper out here, which is always good to see. Have you folks dipped your toes into anything micro crypto over here at CME? Yeah, judging by the numbers, the answer is no. Ah, here we go. Micro Ether also putting up a little bit of paper this week as well. 904 contracts on the tape. So finally, you know, for a while there, we saw these things printing some size, and then they kind of all dried up. And now it seems like maybe it's starting to come back a little bit. We've got the contract expiring on February 3rd, so in about 15 days, the 1,500 calls out there doing nearly 600 contracts this week. So that's the lion's share of the paper out here. Let's see. Yeah, it went up 572 times on Tuesday, all opening. That's the entire OI for the strike. So interesting. Some opening paper. By the way, if you're wondering, what is the vol out here? 63 on the 2-week ETH contract. Let's look really quickly at Bitcoin as well, because Bitcoin vol has been getting a little low. Maybe this recent move has juiced it up a little bit again. And going out to the Feb contract has about 35 days to go. That's about a 56. That's up 3.5 points this week. Still, if you know anything about Bitcoin, that's still fairly low, all things considered. But maybe there are some signs of life out there, listeners, in terms of interest and action for all things crypto. And you know what? We got it on our number 5 movers and shakers this week. And we haven't talked about the big dog in the ags for quite some time, which is corn. Maybe we'll head out there next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. And again, corn is the big dog. It's the kind of E-mini S&P of the ags complex. That's the place we always recommend for newcomers to the world of ags, and hasn't been on our movers and shakers for a little while. So when it is, we have to take the opportunity to parse it out there. Remember, this is a bit of a truncated holiday week, so we're probably not going to see the volume numbers that we expect outside of products like Bitcoin, which seem to be doing their own thing. But outside of that, corn looking a little light this week, 321,000 contracts. We expect it to certainly be north of 400,000 on a normal week by today. But again, we were off for Monday. Where is corn right now? 676 and a quarter, up about 1.25 points on the week, or 0.2. Of course, you go back to last week's show, it's up nearly 2%. By the way, where do you find this, listeners? It's at the top of the list, ags, top of the list. Then you go over to the grains and oil seeds. And once again, product corn right there at the top of the list, listeners. And of that fairly light 321,000 contracts, 43% going up in the March contract. It has about 36 days to go. So we're going to hang out there. That's always refreshing about the ags, is they kind of trade on their own schedule. It's not all going away tomorrow like it is with the equities. Even more so now with some of the equities. We'll get to that a little bit later, I think. But intriguing stuff out here. So 676 and a quarter is where we're hanging out. So our 675 strike is pretty much our at the money. What is the vol in corn? And you know what? Pretty anemic. 16 and a half. That's off about 1.3 points out there right now. So even below what's already been kind of light out there in equity vol right now, VIX obviously getting a bit of a lift out there today, back in the 20 handle after kissing 18 last week. But still, corn vol looking pretty light, especially compared to some of the other products we're going to talk about out here today. In terms of skew, let's see. Last week we had the puts 4.4% cheap. This week 2% cheap. So the puts getting a little bit less cheap, but nothing to write home about. The calls last week 4.2% cheap. This week 2.6% bid. So they're both kind of swinging a little bit. But at the end of the day, we have a 2% discount to the puts and a 2.6% premium to the calls. All things considered, there's not really much skew to write home about. We're not seeing the options pricing in any fear and or premium in one direction or the other, at least not in the March expiration cycle. And the big dog out here, listeners, I said we're at a 675 is pretty much our at-the-money strike. It's the 6.5 puts doing nearly 17,000 contracts this week, 16,919. So that's decent paper for a shortened holiday week. The big day was Tuesday, making up for lost time, 9,500 going up then. 4,100 yesterday, 3,200 today. It looks like closing throughout the week. So maybe as we're rallying away from that 650 strike, folks deciding to get the heck out of Dodge and take those off. Either way, that is pretty much what we're seeing out there, listeners. And then we have right behind that, looks like we have the 700 calls, I should say, going up 13,000 times. Again, looks like a lot of paper closing. 7,100 on Tuesday, 5,000 yesterday, and about 1,000 today. Again, closing throughout the week. So folks bailing on the 700s as well, which is kind of interesting given the fact that we're not that far away from that right now. Listen, there's only about 25 handles away. So intriguing that they're bailing on those, but c'est la vie. They do seem to be getting the heck out of Dodge. Let's look a little bit farther out. Let's see. Any other interesting and or aberrant paper? We got about 660 puts going up 11,200 times. These are also here in the March time frame. The big day for those also Monday, 5,100 on Monday. Those were opening 3,700 yesterday, 2,400 today. So a little bit of back and forth action on these 660 puts. Go a little bit farther out, see if we see anything other interesting and or aberrant prints. We got the 680 calls going away in about 8 days. They did about 8,000 contracts this week, so a little bit more action there. Almost 5,000 on Tuesday, 1,500 yesterday and today. So opening throughout the week. So a little bit more action opening on the 680 calls. That makes some sense. We are flirting with that strike. We are within spitting distance of it. The 4.5 puts going up out here in July. Also pretty active this week to the tune of 6,033. All of that trading yesterday in one big print, 6,033. So all opening, literally zero on Tuesday, zero today. But the 4.5 puts going up 6,000 times. Looks like the 500 puts also went up the same day, 4,222 times, also opening. So it looks like it can't be a roll because it's opening on both legs. So it's probably, if it is related paper, probably opening vertical paper. So the 500 4.5 put spread interesting. In July, they got some time for that, but still, speaking strike selection, you're talking 175 handles out of the money. Interesting stuff out here. That's why we like the Ags. They have all kinds of paper. If that's not optimistic enough for your blood, how about these 700 calls? 5,000 of those going up this week in May, listeners. So the May 700 calls went up 5,000 times. And they were a little bit more scattered. 3,300 on Tuesday, 1,400 Wednesday, about 400 today. And again, opening throughout the week. So opening paper, again, the 700s, we are within spitting distance of that strike. So that makes some sense. Oh, you know what? Missed one way out here, listeners. If you scroll all the way down to D's this year, we got the D's 800s. I was looking for a little bit longer term. It's always usually two areas of liquidity when you're talking about the major ags like corn. Something nearer dated like the March, and they go a little bit farther out. Obviously, with the different harvesting and planting cycles, that's where you see the paper usually line up. So that makes some sense that we are seeing the D's 800 calls going up 11,444 times. Good chunk of that was yesterday, listeners. 9,204 going up yesterday, all opening. 2,100 today, only a couple of hundred on Tuesday. So a lot of action going up yesterday on these D's 800s. 125 handles between now and D's expiration. We've seen crazier things out there, listeners. And again, if we see more action in terms of what's going on with Ukraine, obviously that's more directly impactful for wheat, but still it has a spillover effect for the rest of the major ag markets. So it could be interesting developments out there. Obviously, all this weather we're seeing across the nation these days also having interesting impacts on all things ag. So yeah, the D's 800s, it would actually be probably looks like a number 3. Yeah, they would actually be number 3. They just barely beat out the 660 puts going out in March. They did 11,200. So the 800 calls in D's would actually be our number 3 most active contract out here in corn. So there you go. I know we have a lot of corn heads out there. They write in all the time saying, hey, can we see more ags and more corn specifically on the show? There you go. I hope you enjoyed it. Bit off a little bit of ags for you folks out here. Listeners, oats and lumber, you know the deal. Not really much to sink our teeth into there. Before we get out of the light side, let's probably round it out here with a little bit of the old energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
Chat is loving the corn talk. Talking about the corn kid. Yes, the corn kid, a great meme out there. He would certainly love the segment that we just did. It's corn. I've got that in my head. Thank you. Thank you, listeners, for putting that in my head as we're trying to do the show here. Let's get on out to the energy, keeping it in the upside. I said WTI just barely making the top 5 movers and shakers this week. I should say barely missing the top 5 movers and shakers. Coming in at number 6, 1.47%. We can hang our hat out there really quickly because I know a lot of you folks pay a lot of attention to WTI for a variety of reasons. It impacts your wallet very directly. $80.84 is where front month WTI is going out right now. So a little bit of a lift on the week, up about $0.75, about nearly a full percent, about 0.9% out there this week. Obviously, go back to the end of last week's show. It's up about 1.5%. I know that's not music to a lot of your ears. You want WTI to continue dipping back into the 70 handle and perhaps below. Things are also dipping on the volume front, even though not as bad as you might think. Again, you expect to see WTI in a normal week somewhere around 440,000 contracts right now. It's at 365, so not lagging behind too badly out there. And of that, about 40% going up in the March expiration, which has about 27 days to go. We're going to hang out there. What is the volume? You might be wondering in WTI right now, 39.25. So again, looking a little bit frothier, even though it's off 1.4 handles on the week. So again, if you're wringing your hands in equity vol, that's not enough for you. Or maybe we're just talking about corn at about a 16. That's not doing it for you. Maybe energy is where you want to hang your hat. And we get to nat gas in a little bit, our number 1 dark side mover. That's certainly going to have some vol for you to bite off. But even WTI hanging out at about a 39. So if you're looking for places with a little bit more volatility, you do worse than looking for energy right now. In terms of action, the March 95s are the most active contract in the March expiration cycle. But actually, if we go outside of it, all the way out to April, the most active overall contract on the week was actually the April 110s. Are we getting back into that range again? Oh, listen, hopefully I'm as I see it right now, I'm nervous that it's going to be another one of these stupid verticals. We shall see. I hold my breath as I click on this one, listeners. Again, by the way, how do you find this? CMEgroup.com/TWIFO. Pop out of the ags at the top of the list and go down a few to energy and then over to product category WTI crude oil. And you will see, well, it is a vertical, listeners, but it's not quite as nonsensical as some of the other ones we used to see that were 1 point wide. This is the 110, 115 vertical that went up 13,000 times this week. So they're a little bit wider than the other nonsense they used to put up out here. The big day was Wednesday. Actually, both days are about equal. 6,500 times it went up yesterday and today. Closing yesterday, so I'm going to guess probably closing today. So somebody bailing on this fairly tight vertical out here. Maybe they decided the April 110.15 wasn't getting it done for them. Getting the heck out of Dodge with whatever premium they had remaining. Either way, a lot of closing action on this fairly tight vertical. I am happy we're not seeing those 1 point wide verticals anymore. $5 wide. I could see a little bit more argument for out here. Intriguing stuff nonetheless. Let's get to the real paper, though. Go to the March 95s. In terms of real action, this is kind of topping the list. The 95s going up 11,900 times this week. Again, the big day for those was yesterday. 5,400 going up yesterday. 4,000 today. 2,400 on Tuesday. Looks like mostly opening throughout the week. We don't know about today's paper, obviously, but pretty decent paper. And then right behind it, we have the pars going up 11,800 times. This doesn't seem like vertical action, though. It's eerily similar totals, I'll give you that. But they traded very differently. For example, the 95s traded 2,300 times on Tuesday. The pars only traded 500 times. The 95s traded 5,400 times on Wednesday. The pars traded almost 2x that, 9,500 times. And then the 95s traded 4,064 times today. The pars only traded 1,688 times today. So it's not vertical paper. It's just eerily similar volume going up on two very close strikes out here. So intriguing stuff. Number one, number two, outside of those nonsense verticals, are going to be the 95s and the pars. Only 100 contracts separating them on the week. Let's go a little bit farther beyond that. Let's go down to the 90s. They did 11,300 contracts this week. The big day for those also Wednesday. 4,758, 2,500 today, and 4,000 going up on Tuesday, slightly closing there. So some back and forth opening to closing action on the 90s out there. I don't know. Are we starting to get in this range again, listeners, where we're talking 95s, pars, and above? Paper-wise, it sure seems like we are. And it's opening paper, a lot of this, too. So I don't know. I don't know if the world needs another run to the triple digits in WTI anytime soon. But that certainly seems to be how the paper is lining up. Let's look at this, at the skew really quickly and see what that's reflecting out here. Last week, the puts were 5.9% bid. This week, 4.7% bid. So the puts were leading the dance last week. They were more bid. They're a little bit less bid this week. The calls last week were 4.1% cheap. This week, 5.5% cheap. So the calls overall getting cheaper. So we have a very equity reminiscent skew here where the puts are slightly bid, the calls are slightly offered. Obviously, if this was a real equity, we would see more bid to the puts and more of a discount to the calls. But still, at least in March, the net bias on the skew is showing some bias, some concerns to the downside. So maybe a lot of that upside paper is folks overriding some of these 95s, pars, and 110s out there. Intriguing stuff, nonetheless. Let's go a little bit farther out. You know, there's always interesting paper lurking in other parts of the term structure here in WTI. Let's go to June. The June 70 puts, also pretty active this week, listeners. The big day, actually today, 3,215 today, 3,187 yesterday, so neck and neck, and then 1,600 on Tuesday. Total of about 8,000 on the week. Back and forth opening to closing. 70 puts here, listeners. Think we could break through the 70 strike again? Sometime by, what is this, June expiration out here? A lot of paper going up saying some action might be happening on 70 sometime soon. Also see the 70 puts trading in September. That's interesting. 5,300 of those. The big day for those Tuesday, 2,400, 1,800 yesterday, 1,100 today. Opening throughout the week there. What do you think, listeners? September 70 puts. Would you rather buy those or sell those? Do you think we could be below 70 by September expiration, or maybe some of this upside paper has you spooked and maybe you think we're heading back up? 70 puts also active here. Again, that's September. And then 90 calls going up about 3,000 times this week. Intriguing paper out here in WTI. I like the fact that the upside skew is slightly fading an upside move. So maybe we are not looking at a return to the par strikes. But then again, there is a lot of paper flying fast and furious up there. It can't all be fading. So intriguing stuff afoot out here in WTI. Let's keep it in the energy. Let's go to our actual number one dark side offender this week, listeners. It's our old friend. It's Nat Gas, off 7.45% since our show last week. Man, Nat Gas is the product that keeps on giving in terms of volatility and in terms of volume. 364,000 contracts on the tape. So keeping pace with WTI and looking, a little bit lighter than it normally would, but still a holiday shortened week. That's nothing to sneeze at. Nat Gas, threatening the three handle these days, 3.28 coming into the start of this segment, listeners, off about 14 cents or a little over 4% just since Monday's show. Obviously, go back to last week's show, it's off 7.5%. So we were just talking with Carly Gunn on the show last week. Maybe are we starting to see the bottom here in Nat Gas? And the answer since last week's show was a resounding no. We're getting closer to the three handle. These are price levels, listeners, that are, I hate to say it, but more normal for Nat Gas. Nat Gas is usually bouncing around in this 2.5 to 3, maybe a little bit north of 3 range on a normal year when things aren't completely whack job crazy. So to see it getting closer to that normal range again, that's intriguing stuff. And where was the action this week? Listen, I said about 364,000 contracts going up. 25% of that going up, in the contract that goes away in about 7 days. So seeing a lot more near-dated paper in Nat Gas. And again, who can blame people? This thing is whipping around like crazy. You're going to want some gamma. And it's kind of a close race. And then we have the March contract that has 35 days to go. And that one also has about 21% of the paper. So it's all very near-dated paper. We'll kind of take a look at both of them. We'll look at the Feb contract that has 7 days to go and March, see if there's big differences. Feb contract at 3.28 right now. The March contract, 3 1/8. So interesting stuff out there, looking even cheaper for March. In terms of vol, like we said, there's some juice to be found in Nat Gas. The Feb contract, such as it is for vol with a week to go, 107 off 2 3/4 on the week. The March contract, a little bit longer term, 93 off 4 points. So again, you're talking many multiples of your equities, or certainly what we're just talking about with corn. Even WTI, which has some juice out there, this is still multiples of that as well. So Nat Gas in kind of a class of its own right now when it comes to volatility. And again, who can argue that it isn't warranted given the moves we're seeing out here? Last week on the Feb contract, the puts were 1.9% bid. This week, 1.1% bid. And in the March contract, the puts were 2.2% bid. Last week, this week, 1.8% bid. Let's jump to the calls. Not a heck of a lot of evolution there. The calls were 0.7% bid last week in February. This week, 0.4% cheap. So they swung about a point, but still they're kind of flat to the at the money. And the March calls, 0.4% bid last week, 1.8% cheap this week. So a little bit more swing. In fact, we have a modest equity skew popping up here. 1.8% bid are the puts, 1.8% cheap are the calls in March. That's eerily symbiotic out there. But outside of that, not a huge evolution skew-wise. And also, not a hefty bias in either direction from a skew perspective. So have we found a little bit of near-term equilibrium for Nat Gas? I have a hard time saying that with a straight face because this thing rockets 7.5% every week, but the options aren't pricing in any crazy moves. Let's see what we can find out here, listeners. The most active contract, such as it was, just barely taking the crown this week, were the 3 puts here going away in about 8 days. They have 11,700 contracts. The big day was today, 6,300, 3,500 yesterday, 1,800 on Tuesday. Back and forth opening to closing on these 3 puts. And then right behind them, listeners, we have the 4 calls in March. So, tale of 2 different trades out here. The 4 calls now, 11,171. So exactly 500 contracts separating them. We have 11,671 of the 3 puts going away in about 7 days and 11,171 of the 4 calls in March going out in about 35 days. So exactly 500 contracts separating. That's interesting. The big day for those was not today. It was actually Tuesday. 6,100 going up on Tuesday, 2,300 on Wednesday, 2,700 today. So a decently active day. These look like they were opening all week long. So intriguing stuff out here. Again, we're not seeing a ton of evolution on the call skew, and such as it is actually getting cheaper. So maybe a wee bit of overwriting going on with these. Maybe people think we're not going to break the 4 handle again before March expiration. By the way, I'd be cautious to read too much into any of the skew right now, listeners, because it's not really showing much. Let's look really quickly. Also saw the 3 puts. They were also active here in March, going up 9,400 times. The big day for those also Tuesday. So Tuesday, obviously a hot day for the March contracts. 6,800 on Tuesday, less than 1,000 yesterday, 1,800 today. Kind of back and forth opening to closing on these 3 puts as well. Listeners, if you had to make your own bet here in nat gas, let's go out to March. So we'll give you 35 days. Would you rather buy or sell the 3 puts or buy or sell the 4 calls? We're at about a 3.25 right now, so obviously we are closer to that 3 strike. Which way you think we're trending? Think we're going to be trending north? Would you rather overwrite the 4s? Maybe someone is up to that. Be curious. What are your thoughts out there in nat gas right now? Look really quickly. Also, the 2 puts going up again this week. It looks like the 3 puts are part of that put strip that goes up every week, because we have a lot of 3 puts going up all the way out to September and beyond again. So that's usually the producer, refiner, put strip, call it what you will out there. There's some end user who puts up a nice strip of puts, usually somewhere in that 2 to 3 handle every week. This week it is the 3s. That's also obviously contributing to why those Feb 3 puts are taking the top spot right now. Actually, you know what? It's like I missed one way out here, listeners. And we don't usually see a lot of paper this far out in nat gas. It's usually very near date. We have to go out to October, and the 2 puts out there, listeners, are actually taking the volume crown this week. That's why you got to scroll down a little bit in these big contract, listeners. The 2 puts are screaming out here in October this week. 13,473, almost all of that going up today. 12,122 going up today. 1,001 yesterday. Only 350 on Tuesday. So someone's got an enormous axe to grind here on the 2 puts in October. 2 handle by October, listeners. You think we can get there? That's usually where we start to see the seasonality start kicking in to bring nat gas the other way, right? We're heading into winter. People are worried about a cold winter, all the other things that drive nat gas and that seasonality in nat gas. So intriguing. Maybe they're selling the hell out of these 2 puts. There are 18,172 open on this strike. So there is a good chance they could be selling, or it should be closing, I should say. But still, intriguing stuff. It doesn't look like it's a roll or a vertical, because 3,175 of the 2 half puts have gone up in October this week. So if it is any sort of vertical or roll action, it's done on a pretty sizable ratio, about 4-1. So intriguing stuff. So taking the top spot, the 2 puts in October, listeners, 13,400. That's why you always have to scroll down in all of these products, listeners. There you go. Nat gas lighting it up, extremely active out here. Let's see, what else do we have? We have E-mini Dow, we have Class 3 milk, platinum, and palladium. Not seeing a ton of action out here in the other movers and shakers, at least for names that do a lot of options paper. Platinum, palladium, obviously not lighting the world on fire out there from an overall options volume perspective. So you know what? We actually have some intriguing questions this week. So I think we'll head out some of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, let's get to your feedback here. Really quickly, let's pay off the fun sentiment poll we do at the beginning of the year every year. We asked you last week if you had to buy a 10% out of the money call expiring the end of the year on one of the following product or market segments. Which one would you choose? So SPX or SPY, so your broad equities. Bitcoin, so your crypto. That one's looking good right now. WTI, so your broad commodities, or your VIX, volatility itself. And it ended up 43% choosing the broad equities. Right now, not looking so good, but again, the year is young. Tie for number 2, 24.4% each for WTI and VIX, which is kind of weird. And Bitcoin, about 7.8%. That's pretty close to how things lined up when we asked you that exact same poll question a year ago. The broad equity sentiment was a little bit lower. Only about a third of you were bullish on the equities. Turned out not be the right call in terms of being bullish on the equities. 14% of you were into Bitcoin. That one obviously was rough too. And it was still close to a tie. It was between, I think, 27 and 25% each for WTI and VIX. So for whatever reason, WTI and VIX are closely linked in the minds of a lot of our listeners, at least for the last couple of years. Let's go out to this question, though, that kind of caught my eye. This came from Alex Chivas, and he got a backdoor way to ask about a market segment we didn't really have a chance to put in the show today because it wasn't lighting it up, net on the week at least. And this is equities. Alex has a question. He says, does CME offer the same daily expiration schedule in the E-mini S&P as we're seeing with SIBO? Are they seeing the same volume explosion as a result? So the answer to both of those is pretty much yes. We've been talking a lot about this zero DTE thing in all things SPX. It's taken the options world by storm. It really has been transformative. So I could see how you would ask this question on TWIFO about the CME products as well, because they obviously are very closely linked. And before we break down that answer, let's look really quickly, see what's lighting it up out here in the E-mini this week. E-mini off about 80 handles, or about 2%, 39.37. So starting to get back some of its, a lot of its losses here on the day here. It was below 3,900 not too long ago. So intriguing stuff out there. Still net down 2% on the week. In terms of action, we're seeing 2.81 million contracts. So E-mini, nothing to sneeze at out here this week. And in terms of action, the usual nonsense is going up. The 3,300 puts have gone up 53,000 times. Again, we're at a 39.37. So 637 handle out of the money puts. And then behind that, we have the 3,400 puts. Those are going out in a few minutes, have gone up 31,000 times. And the 3,270 puts, for good measure, in 4 days have gone up 63,000 times. So there's a lot of that noise, unfortunately. But if we get a little bit beyond that, listeners, and we look at the contracts that are expiring today, we do see some decent action, including today. I'm looking at the 3,900 puts right now, expiring today. And they've traded 26,000 contracts all week, 21,000 of that going up today. So that would qualify as a zero DTE trade. 39 quarter puts have traded 15,400 contracts, and 11,800 of that coming today. So it's not all today. It's not like SPX where it's kind of all printing same day, but it is a fair amount of paper. So that's a long way around to answering your question, which is yes. The answer is yes to both. Back when SIBO announced their new additions, it was around April timeframe. CME doing the exact same thing. In fact, CME kind of kicked it off first. They announced theirs back at the end of March. March 31st is when they announced they were going to be launching new Tuesday and Thursday weekly options. And theirs were coming to market on April 25th. I believe SIBO followed them and launched theirs a little bit earlier, April 18th, and then I think May 11th for the Thursday. So they had a little bit of a gap in theirs. But around that same time, that April-May timeframe, is when we saw the additions of these Tuesday and Thursday weekly expirations. So the answer to the first part of your question is yes, they do have them. And are they doing a lot of paper? And the answer to that is also yes. If we look at it from a variety of different ways, CME obviously breaking down their numbers for the year. They just came out with these recently. Equity index ADV across the board up 26%. Now that includes everything. That includes futures and non-zero DTE stuff. And you kind of expect that on a record year. We can drill down a little bit further and get a little bit more detail into this. E-mini S&P 500, that complex in and of itself, had an record ADV of 1.23 million contracts. So that's a little less than half of what's going up today. But then again, that spreads across every day. So even, your end of December and your dog days of August, still doing a lot of paper out there. Micro E-mini futures ADV up 52%, and micro E-mini NASDAQ futures up ADV up 25%. That's obviously just the broad complex as a whole. But if you break it down even further, and you can do this if you use the premium version of Quick Strike, you can dig around in some of their additional tools to see the top trades going up in any product you want. And you can narrow it down by expiration or contract, whatever you want. So I did that just a few minutes ago here for the E-mini, and I limited it to contracts going away today. Now, the one thing I haven't been able to do yet is narrow it down to trades that also were initiated today. So that would be the true zero DTE phenomenon. But right now it's showing me that on the week, again, we talked about 2.8 million contracts going up this week, 2.81. 143,000 of them were expiring today. Thursday contract expiring on the 19th. Now, not all of that went up today, obviously. That includes contracts that went up earlier this week. But I just broke down some decent paper, including the 3,900 puts. That's the leading offender. 14,415 of those have traded this week. So there is a lot of paper. You add up these top 25 trades, that's about 143,000 contracts. So look at this a couple of different ways. As a percentage of 2.8 million contracts, it isn't the same thing that we're seeing in the SPX, where it's roughly half of the volume is zero DTE. I think it broke down at about 43% for the December trading cycle was this zero DTE stuff. So nearly half of the paper in the SPX right now is going up and expiring same day. It's not quite the same thing with the E-mini yet. And I put yet out there in quotes because we obviously are going to see some evolution. But on the flip side of that, they are still very active. 143,000 contracts in this one. And I'd say probably at least half of that probably going up today, close to it. So a fair amount of same day paper. And that's kind of been the trend we've noticed from day one with this show. People on the futures option side, I don't care what it is, if it's an equity, if it's an energy, if it's an ag, whatever it is, people on the futures options world are far more comfortable with opening positions very close to expiration, usually on the premium buying side a lot of times, than they are in your traditional equity options where people, if they do have near-dated contracts, they're mostly just selling them. And that was the way with weeklies. When weeklies really took off, everyone was a rush to sell those things. People will buy puts to open on WTI or whatever it is with a day or 2 days to go because they want to hedge a specific event. Same thing with the ag, same thing with the rates. So we've always seen a different type and style of flow on the futures options for a variety of reasons. There are different users out there. There are end users for these products. There are producers and refiners and everything else. And they have a different use case for the product than your traditional trader. So they may want to hedge a specific event like a crop report or, something going on with OPEC out there. So there are legitimate reasons that people would be opening contracts with only a few days to go, if not the same day. So part of that also, maybe why we haven't seen the explosions, that we've kind of always seen a persistent drumbeat of that type of paper across the broad spectrum of everything that trades over there at CME. So we haven't seen the transformative shift the way we've seen it in SPX, but we are seeing a fair amount of paper. And I do expect that to grow once it just takes over SPX. These products are so inextricably linked that eventually it's going to have to spill over here as well. So intriguing stuff. We'll keep an eye on it and watch as this grows. And again, this was kind of our trend for the year last year. A lot of people are watching and waiting with a great degree of anticipation to see how this trend really continues. In fact, that is our question of the week right now, listeners. This is an area that is not without controversy. Not everyone is in love with these. We just had, like I said, Scott Nations on our Pro Q&A yesterday. He's very dismissive of this zero DTE trend. I think it's just a fad. It's just gambling. It'll be gone in a few months. So we thought we'd put that question to you this week, listeners. Right now, over there at Options, it's pinned so you can't miss it. Get over there, make your voice heard. We're asking you, the zero DTE trend exploded last year. Is this just a fad or is it the wave of the future? And right now, about 2/3 of you, 63% saying it's here to stay and 37% saying it's a fad. That'll be there for the rest of the week, listeners. Get over there at Options and make your voice heard. But great question. Who was that? That was Alex Chivas. Great question. We're going to keep an eye on this. This is obviously the trend everyone's watching. And maybe we'll come back to this in a couple of months and see if this zero DTE thing is really sparking to life over here at CME as well. All right, everybody. That music means we've come to the end of this Just the Facts, Ma'am edition of All Things TWIFO. Again, I love all of our guests. I love it when they join me here on the show, but I also love it when it's just me and you, listeners, just hanging out, talking futures options, crunching the numbers, finding the answer to your questions. We love it all. We were so happy to see so many people discovering TWIFO towards the latter half of last year. It seems like a lot of you really just gained a lot of interest in all things commodities. You want to see how these markets are trading out there. Either way, we welcome all of you. Welcome to the new folks. Welcome to the long-time futures options heads. We love you all. That is going to do it for the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, with vol views. And once in future, Dr. Bix is on fire. He really wants to talk all things vol right now. So he will be joining us again, as well as other special guests tomorrow. So stay tuned for that on vol views. And then afterwards, for all you pro folks, I'll be back breaking down the week that was and indeed still is on the options oddities front. Then we're back again next week. No truncated holiday week next week. So we're kicking things off on Monday as usual, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.